Welcome back, students. Welcome to another class. This is chapter 2 of financial accounting. In this topic, we'll be looking at the IASB'S conceptual framework. The IASB'S conceptual framework. I told you what IASB means. IASB means the International Accounting Standard Board. That's what it means. So under this topic, we'll be looking the courses that will, the outline we'll be looking at under this topic includes a conceptual framework for financial reporting. We're considering the IASB conceptual framework as well. We'll be looking at qualitative characteristics of useful financial information. We'll be considering the elements of financial statement. Thereafter, we'll move towards recognition in financial statement. We'll also be considering other accounting concepts, and finally, under this topic, we'll be looking at fair presentation. So these are the things that we'll be considering under the IASB conceptual framework. It's going to be a good time. So let's continue. Let's take a deep breath and give me your heart and your time, and let us work mind as we uncover what the conceptual framework under IASB entails. A conceptual framework for what? For financial reporting. Framework, you can also use structure. Structure is related. Structure is synonymous to what? Framework. So in case framework might look a bit complicated, when I make mention of structure, there's no really issue. It can be more comprehensive by using such word. A conceptual framework is a system of concepts. It is a system of concepts and principles that underpin the preparation of financial statements. So a framework, a structure, it entails a system that has been put in place which consists of concept, fundamentals, principles that underlie the preparation and preparation of financial statements. So without this concept, without these principles, it will be difficult to prepare a financial statement. So the system of concepts and principles will aid the effective preparation of financial statement. These concepts and principles should be consistent with one another. That is, it should be consistent. There should not be any element of variability in the concept. More recently, the term conceptual framework has come to mean not only the principles themselves, but the document or statement that set out and explains the concepts and principles that support the preparation of financial statements. As a result of development, the conceptual framework is now seen as as the document and statement. It's not just limited to the concepts and principles. It refers now to the document and the document or statement that embodies those concepts and principles to support the preparation of financial statement. So it has been modernized now as a result of development with respect to accounting field. A conceptual framework is developed for a particular regulatory system or a particular set of general accepted accounting standard practice known as GAAP. The International Accounting Standard Committee IASC, the predecessor of IASB, issued a conceptual framework document in 1989. This is called the framework for the preparation and presentation of financial statements, and was adopted by the IASB. So in 1989, the International Accounting Standard Committee issued a framework, issued a document with respect to the preparation and presentation of financial statements. This document was later adopted by the International Accounting Standard Board. It is comprised of the following sections. 1. The objective of financial statement, which has now been replaced. 2. Underlying documents of financial statement. 3. Qualitative characteristics of what of financial statement, which has also now been replaced. 4. The element of financial statement. 5. Recognition of the element of financial statement. 6. Measurement of the element of financial statement. 7. The concept of capital and capital maintenance. So those are the things that comprise the section which have itemized. Now let's now take a look at what the International Accounting Standard Board Conceptual Framework. The International Accounting Standard Board of what? Conceptual Framework. Financial reports are based on, you should know, that are based on what? On estimates, judgment, and models, rather than what? Exact depictions. So based on the information that has been given by the clients, by the organizations, they are based on estimates. Not everything are real. There are some part that has to do with estimations because of the circumstances that are related to transaction. There are part that has to do with judgment, objective or subjective judgment. There are also models that has been incorporated in the preparation and presentation of accounting standards with respect to the rules, concepts, convention and regulation that guides the preparation of such financial statements. So the reports are now based on what? They are not based on the exact figures, they are not based on the exact situation, but based on the happenings. The conceptual framework establishes the concept that would underline those estimates. This framework, it establishes what? Those concepts that would underline those estimates, judgment, and models. Do you get that now? The conceptual framework deals with what? 1. The objective of what? Of financial statement. One of the areas in which the conceptual framework is concerned about is with the objective of financial statement. What is the goal? What is the aim of financial reporting? This is an important part. This is an important part or aspect of what? Of the conceptual framework. And the other area in which the conceptual framework focuses about is what? Is the qualitative characteristics of useful financial statement. It is what? The qualitative characteristics of useful financial information. It also considers about what? The definition, recognition, and measurement of the elements from which financial statements are constructed. And the last part in which the conceptual framework is concerned about is the concept of capital and capital maintenance. The concept of of capital and and capital maintenance. The conceptual framework set out the concept that underline the preparation and presentation of of financial statements for external users. I've taken my time to explain, and I think that financial reports are prepared based on estimates, judgment, and estimates, judgment, and models. So that is the framework in which financial report has been prepared. With the help of conceptual framework, conceptual framework now focuses on those judgments, focuses on those on those estimates and on those models. The conceptual framework set out that the concepts that underline the preparation and presentation of financial statements for external users. Its purpose is what? Now we are looking at what are the purpose of the conceptual framework. What makes it so paramount? So now let's look at those purpose of those purposes of the conceptual framework. One of the purposes is one to assist the IASB in the development of the future IFRS. IFRS means the International Financial Reporting Standards. To assist the International Accounting Standard Board in the development of future IFRS and its review of existing IFRS. So one of the purposes of the conceptual framework is to help the International Standard Board. The International Accounting Standard Board is in charge in the preparation and presentation and issuance is in charge of the issuance of accounting standard with respect to IFRS is. Do you get that now? So the conceptual framework is what is key in assisting the IASB in the development of such standards, and also help it in with the review of existing standard. Do you get that now? I've explained to you what IFRS means. It means the International Financial Reporting What Standard. 2. To assist the IASB in promoting harmonization of regulations, accounting standards and procedures relating to the presentation of financial statements by providing a basis of reducing the number of alternative accounting treatments permitted by IFRS. So it's also key to expect what bringing unity with respect to the regulation, account standard, procedures related to the presentation of such financial statements. You get that now? So it's also key to unity as well. 3. To assist standard setting board. National standard setting board in developing what national standard. So every country has their as the body that oversees and governs accounting standards in that country. So the conceptual framework also up those bodies with respect to certain standard that would be favorable to what the economy. And 4. To assist preparers of financial statements in applying IFRS and in dealing with the topics that have yet to form the subject of an IFRS. So with respect to the preparation of financial statement, when there is area of discrepancy, when there is area of ambiguity in some standard that doesn't seem clear, the conceptual framework makes things clear, and areas where they are not found in the standard, they will provide our opinions and recommendations on how such transactions will be dealt with. 5. This is at point 5. To assist auditors in forming an opinion on whether financial statements comply with IFRS. So they also assist auditors in ensuring that financial statement complies with IFRS. This is 6. Please note this. 6. To assist users of financial statements in interpreting of the information contained in the financial statement, prepare the compliance with IFRS. So the conceptual framework also help users of financial statement, the government, the financial analysts, the investors, the customers, shareholders. They help them to have adequate understanding and also be able to interpret the information that has been provided in the financial statement that has been prepared with respect to the IFRS. 7. This is point 7, not point 6. Sorry for the mistake. To provide to those who are interested in the work of the IASB with information about its approach towards the formulation of IFRS. However, note, the conceptual framework is not an IFRS. It is not an IFRS. Don't misconcept the conceptual framework for IFRS. That might be a big mistake you're going to make. And nothing in the conceptual framework overrides any specific IFRS. So they don't have dispute. The conceptual framework does not have any issue with IFRS, and it does not override anything that has been said in a standard under the IFRS standard. Please take that into consideration. It is very, very germane. So let's look at the qualitative characteristics of useful financial information. The qualitative characteristics that enhance the usefulness of information that is relevant and a faithful representation are what? So categorically, we're looking at those features that a useful financial information must possess. One of it is comparability. It has to do with comparing. It has to do with carrying out a comparison analysis between a year and the other, so that you're able to track performance and also measure the outcome of 1 year to the other year. So it's one of the qualitative feature that the useful financial information must have. Also, the second characteristic is what I call verifiability. This has to do with putting means in place to confirm the information that has been produced, that has been prepared based on the financial information. Number 3, timeliness. The timeliness of what financial information also matters, because financial information is required by users to be consumed for a particular period of time. So when it's not posted, when it's not published, when it's not what presented at that appropriate time, it's going to affect. So it is an important feature, it is an important part that financial information must be in according to time. For a period, it should be for that period and maintain that period. If it's for some days, it should not exceed that period, because it is important that information goes across to the users. And for understandability, what I call it, understandability. Every use of financial information must be understood by anyone that is coming across such that statement. There might be different level of understanding, but a layman should see financial statements and have one or two things to say. So these are the four useful features of financial information. Now let's move to the elements of financial statements. Elements of financial statement. Looking at those things that could be found that make up the financial statement. The IASB Conceptual Framework discusses the 5 elements of what financial statement. Those the 5. And for reporting, they include one for reporting financial position. These elements are what? Assets, liabilities is 1, asset, 2, liability, 3, equity, which falls under what? Which falls under financial report position. And the second part, which falls under what? Financial performance. We have what? Income. And the last 5 is what? Expenses. So to make it easier, let me classify it like this. Element of financial statement. So divided into 2. We have with regards to what? For reporting financial position, and we have what? For reporting financial performance. So under the financial position, it is divided into 3 categories. The elements are in 3 here. We have what? Assets, we have liabilities, and we have what? Equity. Why under performance, under financial performance, we have what? Income and what? And expenses. Income and expenses. So this is 1, this is 2, this is the third element, the fourth element, and what? The fifth element. So let's move on. Let's consider those elements one by one.